traders, welcome back to another video. So in today's video we are going to focus on the CRT trading model. So for those that do not know what CRT is the candle range theory. So this is the theory that is based on one single candlestick. Okay, so let's take a look at this candlestick right here. So we are going to start by marking the high of the candlestick, and also we're going to mark the low of the candlestick, right? So from now we are going to wait for price to either take out the high or the low of the candlestick. Okay, so now once price takes out the high of this candlestick, this is the liquidity sweep, right? So once price takes out the high, we are going to look for selling opportunities in the opposite direction, right? But now if price takes out the low of this candlestick, this means that we are going to look for buying opportunities in the opposite direction, right? So it is that simple, guys. You mark the high of the candle and you mark the low of the candle. You wait for price to sweep out the liquidity, and then we are going to wait for price to reverse back into the range, and then that's when we're going to start looking for selling opportunities, right? So now let's take a look at the real example right here. Okay, let's start by going on the daily time frame. Oh, and this is the Nasdaq. This is Nasdaq. So now we are on the daily time frame right here. Okay, and as you can see, previously I had marked my high right here and also marked my low. So I have the high of this candlestick. This is the daily candlestick, by the way. This is the high of the daily candlestick, and this is the low of the daily candlestick, right? So remember, we wait for price to either take out the high or the low. So in this example, we see that price pushed up. So price has taken out the high of this candlestick. So now let's go on the 1 hour time frame and see exactly what happened right here. All right, so now we are on the 1 hour time frame right here. Okay, let's adjust our levels right here. So we still have the high at the top and we have the low right here at the bottom, right? So now we see that price pushed nicely to the upside right here. Price pushed nicely to the upside and then reversed back into the range, right? So now if we go on the 15 minutes, so if we go on the 15 minutes right here, you can see that we have a fair value gap right here. Okay, we have a fair value gap, and previously I had marked this fair value gap right here, and as you can see, I entered a sell position right here. Okay, so price went down and then tapped into the fair value gap and then started dropping to the downside, right? So now here's what I normally do. Okay, so normally I take partial profits, as you can see right here. So I took my profits right here, but I was expecting price to drop until it reaches this low right here, but we can see right here that price started reversing to the upside. Okay, and normally my stop loss would be above this high. Okay, and we can see that price, so we can see that price has pushed all the way to the upside and hitting my stop loss right here. Okay, So I entered here and I took partial profits right here, but price unfortunately reversed all the way to the upside, right? So now on Thursday, this is the opportunity that I saw. So on Thursday, this reversed back into the range. So now here's the thing, guys. Okay, so remember we mark the high and we also mark the low of the candlestick. So now we wait for price to reverse back into the range, and then that's when we're going to start looking for selling opportunities. Okay, so now this this movement to the upside, this actually invalidated the setup, right? Because now look at this, we have this high and we also have this low. So we can see that price has taken out the liquidity here, okay, and then dropped back into the range. So from here we were expecting price to, you know, continue going to the downside from here, but we see that price pushed all the way to the upside, taking out this high right here. So now does it mean the setup is invalid? Well, technically yes, it is invalid, because we're not sure from here, we're not sure if price is just going to continue going up or what's going to happen, right? But for me, I noticed that price reversed back into the range again. Okay, price reversed back into the range, and if we zoom here, you can see this this white candlestick. This is a bullish candlestick, right? So this is the last bullish candlestick before an impulse to the downside. So then I marked this candle as my order block. Okay, so you have to understand the difference between order block and a fair value gap. So the first entry was from a fair value gap, and this entry is from an order block, correct? So you can either enter using an order block or a fair value gap, so it's still fine. Okay, so now I entered right here. As you can see, price dropped and then came back to tap into my order block right here. So and then what happened? You see price started dropping. Price started dropping right here, and then look at this. Price dropped nicely until what? Until it hit our target right here. Okay, this was our target all along. This was our target, but now this is what happened. And you also need to understand something. Market is always evolving, guys. Market is always evolving, and as a trader, what you need is a repeatable system, guys. This is so simple and it is repeatable. You mark the high, you also mark the low, and then you wait for price to take out the liquidity, and then you're going to look for your entry reasons. Okay, this is repeatable, guys. You can do this almost every day. Okay, this is so simple. And from here we see that we entered a sell, and then price started dropping to the downside as anticipated, right? So now this is something you can apply it on your daily trading. You can apply it on your daily trading. You can either use the daily candle, the 4-hour candle, or the 1-hour candlestick. Okay, all right, so now before we end the video, for me as a technical trader, I'm mostly focused on market structure and patterns. And if you look at this, you can see this is a really nice pattern right here. You can enter upon this break to the downside, and we also have another entry right here. If you look at this, this is another good entry right here, right? So once price breaks out, you can also enter a sell position somewhere around here. Okay, so like as they used to say, there are many ways to kill a cat, right? But as a forex trader, You need a repeatable system, guys. You need something that repeat over and over again.